Welcome to day 96 of me backtesting my way to success. First trade was a win and the reasons why I entered were equilibrium from the swing low to the swing high, 3-hour fair value gap, 3-hour order block, and then I entered on a good break of structure in the lower time frames. Right here, good break of structure, stop loss was below the low that was made with a little breathing room, and my take profits were at this volume area as well as the swing high. Both TPs got hit, so let's just see how the next trade goes. Next trade was a win and a loss, so technically a break even. And the reasons why I entered were equilibrium from the swing high to the swing low, then this 1-hour fair value gap, and on an impulsive move away from the volume area, from the fair value gap and from the golden zone, I entered. So right here, stop loss was above it with a little breathing room. Take profits were at the volume area and at the swing low. And yeah, first TP got hit, and this time I didn't move my stop loss to a break even because I already had this situation a couple of times when I entered and price went to take out my first TP that was at the volume area, then kind of consolidating around it, then shooting up to take out my stop loss, which was at the break even, and then completely going down or in the direction that I'm trading. But this time actually exactly I thought at first exactly the same happened, because right here you can see it would have taken out my stop loss had I placed it at the break even. But yeah, I didn't, so I thought, oh, I'm so smart, this time I dodged it. And then it went down and I thought, oh, I'm so smart. And then it went up, it completely took me out. But it's fine. So since my first TP was hit and my first TP had a risk reward ratio of exactly 1, so like I said, basically a break even with a loss. And yeah, what I can take from this trade, yeah, I'm not smarter than anyone. I should have more stop loss to break even, just like I usually do. I just got kind of greedy, I guess. So be less greedy. That's what I can take from this trade. Let's just see how the next trade goes. And the next trade was also a loss, and the reasons why I entered were equilibrium from the swing low to the swing high, this daily fair value gap, and I entered on an impulsive movement away from the golden zone, the fair value gap. Right here, really impulsive movement. My take profits were at this volume area and not at this one, because as you can see, we had 2 bounces at this one, and it also looks kind of like a resistance level. So I thought I'd take the second one. My second TP was at the swing high. And yeah, I got stopped out. My stop loss was below the fair value gap with a little breathing room. And I think the reason as to why I got stopped out was because price was really consolidating a lot. I can't show it to you like the equilibrium, because as you can see, my 3 and 4 hours are not working. In the 3-hour, and especially in the 4-hour, you can see this impulsive move. And while this may look like in a 1 hour or 2 hour, it looks kind of shit. I guess in a 1 or 2 hour it would have been this equilibrium. And it would have, maybe, but no impulsive movement. I wouldn't have taken this one. So yeah, like I said, this equilibrium. And I think the reason as to why I lost was because price was really consolidating a lot. Because as you can see, price was really just consolidating, going into it and not even really reacting with it. It just was really, really consolidating. And I think, like I said, for the 3rd time already, what I can take from this trade is when price is consolidating inside of the equilibrium range, it's more likely to disrespect the Fibonacci, the equilibrium, than it is to go higher. That's already it for today's episode. We'll see you on the next one.